What's up, everybody? Zach here again. Thanks for tuning in once more to my journey to $1 million. All right, let's go ahead and jump right into it. A lot happened on Friday, and I was taking a look at everything over the weekend. I want to talk about the CongressTrading.com report that came out that shows some interesting moves that Nancy Pelosi is doing. Also, I want to go over the current watch list. I updated it a little bit, have some more very interesting stocks that might be moving a lot this coming week. So this is the week of January 25th, 2021. And let's go ahead and start with Honorable Nancy Pelosi. So it looks like that a couple of weeks ago on December 22nd, she invested a decent amount of money. The first option that she bought was Tesla. She purchased 25 call options with a strike of $500. This is an interesting, and it's really Wall Street bet style, but this could be a really interesting play for her. This is a leaps. The expiration date is in March of next year of 2022. So she is probably set to make a decent amount of money, as well as Apple and Disney. All are leaps that she has purchased. And all are almost $500,000 or more. The Tesla one is currently valued at more than $1 million. But these are interesting. I always wonder what do they know that we don't. And I mean, I think we all know about Tesla and Apple, to be honest with you. But who knows? She's the Speaker of the House. She won again, and so it's just really, for me, she will be more friendly, you could say, towards different laws or anything like that for these companies, things that she has a big stake in, and she has quite a big stake in some of these. You know, Tesla, of course, is the EV. Anything that's going to go EV through Tesla or EV or batteries through is going to go through Tesla. So these are really interesting. Currently, the March 2022 call is going for $427 on Webull. So you would need, for just one contract, you would need $42,000 to purchase one of those. But if you hold this and Tesla continues going up, which I definitely think it will, this could be very lucrative. The next one she got was Apple. She got Apple for a strike of 100. So this is, and the Tesla and the Apple, these are deep in the money, as well as the Disney. These are deep in the money. The price of these common stocks, the underlying stock, is already surpassed the strike price of her option contract. So this Apple one also, you know, and with all of the computers and the phones, and even Apple is building an electric car now, partnered with Hyundai. I think this is also very interesting. Also a 1 year till expiration. And next is Disney. Disney, also a January expiration. Current price on Webull $76. So this is, and she got 100 of these. So currently you would need almost $7,600 to get one contract. You know, Disney is moving towards streaming, and then the subscription for Disney Plus, as well as, just keep in mind, Disney has always been a leader in this industry, and especially with the Star Wars more and more coming out. I think this is a win-win. You know, and before, we've always looked at Tesla and Apple. Disney is I've considered Disney before. It has run up a decent amount. Let's go ahead and take a look at the chart. So this is just since this low right here was on around Halloween. So it's run up quite a lot. And there was a huge gap right here, and this was around the time that Pelosi was buying as well. Although it hasn't really moved since it's been pretty flat since she's bought this huge option contract. But you know, again, I think she might know something that we don't know. And even if she doesn't, it's a decent investment because she has such a long time until expiration. And I think that they would be friendly. They're not going to, since they have such a big stake in these companies, I wouldn't be worried about it. And then the last one that was interesting is AB, Alliance Bernstein. Yeah, and it has nothing to do with the Bears. But this is a banking and investment service company. Seems like they give advice to advice for people wanting to invest decent sums of money. It would be interesting to speculate that this is her advisory company that has given her the advice to buy this Tesla, because I was reading and it said that they have tax and non-taxable strategies. So that sounds like something that they would be interested in. And of course, that's something I'm interested in too. And anything Nancy's drinking, I want to drink it too. Pretty much sums up this report so far. But she bought 20,000 of these common stocks for this one. Decent amount of money, so really interested to see what's going on. This one, the Alliance Bernstein has actually run up a decent amount. I'm not interested in picking up any of these, but it has run up a decent amount since the COVID lows of $13. She should have bought back then. Don't know what's going on in Nancy's head, but you know, for some reason she wanted to buy up here. And actually, the price that she bought at, I calculated it because it was on the 22nd of December, so you can get an idea. It was around $33.40 as of that day that she bought it, and it's already up to 36. That's pretty high. I mean, I'm not really sure, to be honest with you. But we can take a look at the analysts. They're saying that the target price is around $40 as a high, average 38. So this one is still could have some room to grow. I believe it will. And, you know, but still though, would be interesting to see what's going on with that one. All right, let's go ahead and move on to the watch list. First on the watch list was the Apple. Like I said, I think a good target price for this one is around $160 in my opinion. An entry is it currently is $139. If it dips down around a little bit, pulls back a little bit, I think a good entry is around 34 or less. I think that's a very good entry, a very strong buy. Risk I would put very low as 2 because this is Apple after all. They're still leading this industry in the world. Even though they've lost a bit of market share in China, I still think that this is not risky because of the computers, because of the new mini computer industry, and also it's interesting to see what happens with their car, which they are partnered with Hyundai to make. Hyundai is a good company. You know, they make really quality cars. There's nothing sexy about Hyundai, but they're good cars and they have good warranties actually. So it's interesting to see what happens with this. I think it can hit $160 in around 2 to 4 months. All right, let's go ahead and take a look at Tesla. Again, this is nothing new. Nobody's going to be surprised about this one. It's already up 1,000%. This one's going to keep chugging along very nicely, I think. And yeah, I put a price target around $1,200. Officially added all of these to the watch list. And you can find the watch list on my website, prostockadvice.com/watchlist. And I'll always update the watch list with all of these news. I'll always change the price target and different entries and stuff like that. But yeah, Tesla, I think I put this as a 3, a risk level of a 3 because it can be a little volatile and it hasn't been known to drop 30% and also go up by 30% in a relatively short amount of time. Entry on this one is pretty much right now. I set it at $8.45. If it pulls back a little bit, I would just go ahead and buy it. For this one, I'm more interested in 2 things. I'm more interested to get some leaps on this one, 1 or 2 years to expiration, just like Nancy did. I think that would be very interesting because it's going to save you a lot on capital required than just buying commons. But buying commons is also interesting because if you have around $84,000, $85,000 right now, it could be an interesting play to get 100 shares, start selling covered calls. If you can afford it, I think it's very interesting. Now, again, don't do this if you're not bullish on Tesla. If you're bullish on Tesla, I would absolutely do this if you can afford it. So let's go ahead and look. at how much these are going for. Let's just go ahead and say 12 days to expiration. Current price is $846 at time of recording. In 12 days, is Tesla going to go to $900? Well, it definitely could. And if you do get assigned, you're going to have to sell your Tesla, so don't get too attached. The worst thing that could happen is either A, you sell a covered put with your cash that you sold it for, or B, you just buy back the 100 shares. Now look at this. The premium here is $28.60. So if you have 100 shares, you're going to make $2,800 in premiums. That's not chump change. And keep in mind, if you do get assigned and it hits $900, you're going to make the spread from now from $846, if you bought 100 shares right now, up until $900. That's all going to be profit. Not to mention, you're going to make this premium. And that's guaranteed if you sell covered calls. And this is every like 2 weeks, every 12 days. I mean, you could sell a month out at 900. I mean, that's going to be a little bit more likely to get assigned, in my opinion. But let's just say you did 1 month out, you did $1,000. You know, that's also pretty good. It's $2,700 going for it now. But of course, this is all could possibly change once the market opens. So for my price target, I set $1,200, 2 to 4 months. So I think you could do a 2 to 4 months, sell your covered calls, set it around $100, $200 out at that time that you're doing it. And if you get assigned, you get assigned. It's not the end of the world. So if you don't mind holding the Tesla, I would do it. If you have the capital, I would do it. Personally, I have right now 55 shares of Tesla, and I'm really considering buying another 45 so I can do this. Although it says my cost basis is $816, which is not true. That's just when I transferred it in to Webull. So if I sold this, I would get hit with a decent amount of income tax right now. And if it's more than 1 year, you'd get hit with the capital gains tax. So I'm not very interested in doing it. But then again, I guess I could just fork up another $85,000 and start selling a covered call on an additional 100 shares. Just leave the ones I've been holding alone. All right, let's just go ahead and move on to Disney. This one could be interesting for me because Nancy obviously sees something in it that I don't so much, other than the Disney Plus and Star Wars, which is, I'm a big Star Wars fan, so there's that. But I went ahead and set a price target of $205, entry at $166. So if it has a nice pullback, currently it's trading for $172 at time of recording, but I put a buy zone in this gap. So if it fills the gap, I'd be interested in buying it. I would only buy this for leaps. I'm not going to take a risk on short-term options, either out of the money or in the money. But I could do some out-of-the-money leaps, or even possibly in-the-money leaps like Nancy. If you do in-the-money leaps, I mean, you could even consider poor man cover calls because I checked for this one, for the leap that she did for Disney. The delta for her option is literally 92 and 94. For most of them are, because they're so deep money. It's literally like owning these shares of the common stock. It's not much different because the delta is so high. The price is going to change just like it would if you had 100 shares. So this, if you could get this deep in the money leaps with a high delta, you can sell a covered call against it. So you would need less capital to get the leaps than 100 shares. That's a fact. And as a matter of fact, it's about half, or less than half of the required capital to get the deep in the money leaps. And once you do that, you can sell a covered call against it. And that's what a poor man covered call is. The risk is a 2 because it's Disney. I don't see any problem with this. I wouldn't be all that nervous about it. Just get ready to sit on this position for a while, because it's not such an innovative company like Tesla or NIO or Ford even now, I would say. Something like that. But if you're okay with sitting on a position for a while, it could be interesting. All right, and then like I said, Ford. Ford is really interesting, and I've actually gotten some free shares of Ford from Webull. So if you want to go ahead and click this link, and I'll also put a link in the description. They were giving away some free shares of Ford. So you go ahead, and if you don't have an account already, go ahead and use my link, sign up. You're going to get 4 free shares. Also, it really supports this channel since I do all of this for free so far. All right, well, anyways, the Ford has a 300-mile range electric Mustang that they're building, and it's supposed to release either the end of this year or next year, but we'll see. And this is really going to be the future of vehicles. So if you have a chance to get in Ford, and this is cheap, it's only $11 right now, I would go ahead and do that and do it longer term because they have seen the writing on the wall. These companies, really they're boomer companies, but they're starting to shift towards electric. And just like I wrote about in an article last week about NIO and Xpeng in China, the German car manufacturers are coming to get a share of the Chinese market with their new electric vehicles. But also with Volkswagen. But anyway, so my target is $13. I don't think that would be very hard to hit, especially with all the publicity that Ford is getting right now. Entry would be $11. If it dips back down, is a strong buy for me. Risk is a 3 because, as you can see, there's been a couple of gaps that might get filled, and it could be a little volatile. I'd go ahead and cut this around 10. This is one of the positions. If you have some extra capital, I would go ahead and do it. If you have a low account balance, also do this. This is going to be a cheap one to sell covered calls on. Because it's only 11. Well, the entry price is $11, but right now it's trading for 11.5. So if you have about $1,100, $1,150, you can get 100 shares and go ahead and start selling covered calls. And since this one is hot and trending right now, the premiums will be nice. Time frame 3 to 5 months. Just expect if you go into this one, just be okay with holding it for a while. All right, next is Blackberry. Everybody's heard about Blackberry on Wall Street Bets, Reddit, and the news. This one has gotten a lot of attention lately. And, to be honest with you, this one has just jumped up quite a lot. Just an incredible amount. More than doubling in just a short amount of time. Like in the beginning of December, it was trading for around $5.50. Or $6. This one, it's going up a lot, and the consensus seems to be online that it's going to keep pushing. I would consider this a 5 is a very risky, just because there's a lot of gaps to be filled. I would be careful overall because it has gone up so much, and if you watch the MACD, it is way overbought. But that doesn't mean that we can't go in on it, because we can still play the hype, play the rumors. All of those things are totally legit to be doing. Current price target is $15.50. If it dips down to $13.50, I'd probably buy it. I would just do an out of the money short-term call on this, which is very risky, but I would do it with a low amount of money, because this one feels more like gambling in my opinion. I'm not a YOLO meme stock kind of guy, but I'm not against putting a little bit of money on it. So if we look at this, we could, I would say, do maybe like a 12-day. Current price is 14, maybe even a 15, 12-day. Could be a little bit expensive, but overall it's it would cost you $172. Could get a couple of those. Could even diversify and get a 19 as well. 15, 16, 17, something like that. And if they're in the money, I mean, you're going to be making tons of money. As you can see on Friday, this closed up 100%. So just one day it doubled. So as you can see, in a 150%, I mean, it's just a lot of money that can be made. Go small, be okay with losing it, because it could tank. But the consensus online, especially with the Wall Street Bet community, is that it's going to the moon. So just keep that in mind, keep everything in mind, and be a little bit careful. I do a 1 to 2 week out of the money call, in my opinion. All right, and last, but what you guys have all been waiting for, is GameStop. And this one doesn't need much introduction. Everybody's heard of this one if you've been paying attention in the slightest lately. I'm sure you've heard about GameStop. I'm going to go ahead and pull this up because we can talk about some options. Possible plays we can do on this one. But yeah, I want to just go ahead and read this to you, what I wrote on my blog. let me clarify what's going on with GameStop. There are more shares of Game than what are being shorted that actually exist. If a short seller wants to close this position, they would have to buy shares first. That buying shares would inadvertently drive up the price. Therefore, it would be a domino effect to buy shares in order to close your short when the price is rising faster than what you can buy to close the short. This is called a short squeeze, which is what happened on Friday. Oh, this is not what happened on Friday, sorry. What happened on Friday was a gamma squeeze. This is when people buy call options at an incredibly fast pace, and the market makers are forced to buy the underlying to hedge. And this in turn is going to push the price of GameStop even higher. Now, once a gamma squeeze happens, there is a very high likelihood that a short squeeze is going to happen. And again, a short squeeze is when people are shorting more shares of GameStop than what actually exist. So to close the position, the short sellers will need to buy shares of GameStop to even close their shorts. So keep that in mind. It would go up an incredible amount. This doesn't often happen, but in my opinion, it's going to happen. I really do think that there is going to be a short sell coming. And this is a day candle chart. You can see what happened on Friday. That was a gamma squeeze. Just imagine what would happen if it was a real short squeeze. You know, it's 50% up on Friday. It's crazy. Pulled back a little bit in aftermarket. It pulled back. Go to the hour candlestick chart. So you can see at the high of 76.73, and even in the aftermarket, it started pulling back. So we'll see what happens when the markets start opening in the early morning, the pre-market that is. But it's going to be very interesting. And like Blackberry, I would probably, I would go ahead and put some money on some out of the money short-term calls, just because this could be very interesting. I was thinking, where are my options? Why is it over there? Okay. So let's go ahead and look at the options on this. Give it some time to load. Well, all right, and then, let's just go ahead and say that this is a very high risky play. Just like Blackberry, put a couple hundred, couple thousand. Just depends on what you feel comfortable with losing, because with how much it's gone up, it can come down, just like gravity. But if you're okay, I would do a short-term, out of the money option for a chance to make a bunch of money. Target price, I have no idea. This is a very unique event that's happening. I'd probably enter around 60, 65 if you're lucky. I do believe that this is just going to shoot up once the market opens. Risk is a 5+. This is one of the riskier things that I've ever written about. But just keep that in mind when you're buying. Time frame, 1 to 2 week out of the money option, I would say could be interesting. All right, so this is not loading. Let's just do a smaller amount of options for Webull. And the calls, all right. It's not going above 50. Let me see if I can figure this out really quick. Here we go. But this is not loading in. All right. As you can see, there's probably a lot of people looking at this right now. All right, so if we do a $70, let's just say, wait until the price loads in. Looking like it's about $10 though. So let's just say $10. That's going to cost you a decent amount of money, actually. These are very expensive. So if you're okay with it, I would go ahead and do it. That's a 12-day. You could even try your luck on a 5-day. Could also be pretty interesting. 5-day, $70. This one looks like it's going for about $8 right now. So you're going to need $800 to get into that. If you're okay with risking that, then that's cool. Go ahead and do it. You could even do a little bit further out. Alternatively, to get a little bit cheaper, you could do further out on could even do an 80, 85, 90 on the the 12-day, so it's a little bit further out, but you're going to get a cheaper price overall. And then you don't have to wait till expiration. You can always sell that when you hit 100, 200%, even more. Who knows? Just on Friday, it went up 100%. But anyways, you guys get the point. Just be careful. On my blog, here's my risk. You can take a look at the little risk explanation. And also, I wanted to go over another thing. Is I have a current warning issued for the entire market. Just be aware that this might pull back soon. But anyways, guys, go ahead and follow me on Twitter. Subscribe, hit the like, turn on the notifications, subscribe to my blog. Enter your email right here in the bottom of my website so you get email notifications. I make videos on every blog that I post, every analysis. This is my journey to $1 million. And if you need a Webull account, don't forget to go ahead and hit this right here and get yourself 4 free stocks. All you need to do is deposit $100. And the stocks are usually about $8 to $12, so this is literally a 30-40% ROI on your $100. So if you are looking to start getting into this more serious, I would highly recommend it. All right, guys. See you next time. Peace.